our team has executed projects across the country. We've got a portfolio that is capable of delivering EBITDA growth that I think will get us noticed. We're heading right into a catalyst-rich quarter. So I think right now, I don't think there has been a better time for somebody to come in looking at historic levels. And I think we've done a lot to de-risk the business since our initial financing.
Hey guys, today we're here with Chase Edgelow from EverGen Infrastructure. Chase, it's been a long time coming. We met maybe a couple of years ago. I'm excited to talk to you a bit more about your company. So thanks so much for giving us some of your time today.
Yeah, likewise. I really appreciate the chance to come on and tell our story, tell a little bit about EverGen, and hopefully people find it interesting.
Well, I certainly do. And, I know your story, but for somebody watching that's not as familiar, why don't we just start right from the top? If somebody doesn't know you, can you introduce yourself? Tell us a bit about who you are, your background, and then we'll get into the company.
Great. So I'm Chase Edgelow, the CEO and co-founder of EverGen Infrastructure Corp. We founded the company about 2 years ago. Prior to that, I came from the infrastructure world. So my background is I spent about a decade at Macquarie Group, which is one of the larger infrastructure fund managers in the world, a lot of toll roads and highways, and specifically looked at investing in energy infrastructure with the view that you're getting long-term, stable, contracted returns. And that was kind of the formula for EverGen out of the gate. My background before that, I'm an engineer by training. I went to school in Eastern Canada, studied engineering physics, and then worked in the oil and gas sector out of the gate, putting traditional natural gas energy infrastructure into action in Northeast BC.
Okay. So for somebody new to the EverGen story, so you guys are, the buzzword here is renewable natural gas. So can you tell us a little bit about what that even means and then talk about what EverGen's doing?
Yeah, so I think anybody following global politics or the energy world today sees this push-pull of the transition to low carbon fuels and the reality of today, which is that there isn't enough renewable energy available to make that transition quick. I think what renewable natural gas represents is a fuel source that's available today that uses really existing off-the-shelf technology. There's nothing, no technological advancements needed or leaps of faith required, like you see with other sort of unicorn fuel sources. What you have is a source of fuel that's created from decomposing organic waste. So EverGen is a platform that is dedicated to solving two problems at once. One being, how do we manage or better manage our organic waste and reuse and recycle that waste into a form of fertilizer, at the same time capture the energy as that waste decomposes. So taking it back a step, if you look at a traditional landfill where you'll have food waste and other organic material in that landfill, as that waste gets buried deep and deeper into the landfill, you get what is essentially methane production or biogas production from that decomposition and from being buried deep in the ground. So that methane production traditionally would go to atmosphere, would seep out of existing landfills across Canada. And if uncaptured, that methane is 30 times more harmful than CO2. So the infrastructure that we build captures that methane, and it's used in the existing natural gas distribution network. So houses across Canada, Fortis BC has a program in BC, Énergir has a program in Quebec to take in the renewable natural gas and distribute it to their customers.
So in kind of the current paradigm, and tell me if I'm oversimplifying this, there's waste produced, be it from restaurants or farms or from something more commercial. That waste is literally just simply trucked to a landfill and just dumped in a pile. Is that kind of as sophisticated as we are in Canada currently?
Yeah, that would be the history. I think today we see a lot of programs that have come into place. I think BC's probably leading the way with diverting organic waste away from landfill. So we've got green bin organics recycling programs that take about 50% of the organic material and divert it away from landfill. What hasn't been built, though, is the energy infrastructure to capture the gas from that organic waste. So traditionally would have gone to landfill. Today might get used in composting, might get trucked out of region, out of sight, out of mind. And then a small portion of it gets used in waste energy facilities like what we're building today. That's a good example of a fairly advanced region. If you look across Canada, we're starting to see more and more adaptation of these green bin programs, which is the starting point. So if you're diverting the organics away from the landfill, the next step is who's going to build the infrastructure to process and capture the gas from that waste.
So can you kind of walk us through what it would look like from, production of waste? Obviously, it's diverted to your facilities. Can you kind of show us what that process looks like and what you guys do with it?
So walking through the process, we've got 3 types of waste traditionally that would come to a facility like ours. Municipal or residential organics that are sorted by residents and trucked to our location. That municipal green bin waste is high in energy and has already been sorted. Then you've got agricultural sources, so manure that traditionally would have either been put in a lagoon or spread on farmers' fields. That's a great source of renewable gas as well. And then commercial food waste, so both pre and post-consumer food waste. That tends to be the lagging waste stream in terms of diversion mandates. So more of that waste ends up in landfill than, say, residential organics in Canada. And that is really the third source of waste. So all of that organic material comes in. We typically look to have mixed waste facilities, so we would commingle all 3 types of waste in large anaerobic digesters. And really what those are just essentially large tanks that act like giant stomachs and accelerate the decomposition process of those organic materials. So off the top of the digester, you get biogas production, which is primarily methane. And out the bottom, once all of the gas has been produced, you've got an inert digestate material, which really is high liquid content fertilizer that can be spread on farmers' fields and used as a substitute for synthetic fertilizers with high nutrient content from all of the food waste and the manure that's gone into the digester on the front end. So all those nutrients come out the back end and can be used and recycled.
Okay.
Off the top, where the biogas has been produced, we then upgrade the biogas, which is really taking out everything that's not methane, so primarily taking out CO2 that's produced as part of the process and putting the methane into the pipeline where we sell it to the utilities on a long-term fixed price basis.
So you're able to capture all of that methane that would have just otherwise, I guess, essentially vented into the atmosphere?
Yeah, and because methane is 30 times more harmful than CO2, or there's varying schools of thought on how much more harmful it is, but that's kind of the generally accepted level. The fact that you're capturing the methane, even though you're using that gas and burning it and it's turning into CO2, you're capturing 29 times the CO2 equivalent that's being produced. So these projects are actually considered carbon negative. And so when a utility brings in renewable natural gas into their system, it's got a lot larger impact than, say, bringing solar or wind content into their system, because those still have carbon intensity associated with the production of solar or wind power, versus renewable natural gas, which is really capturing a source of emissions at the source.
Okay, so, and of course you're able to sell that renewable gas, but I just had one kind of aside here. You mentioned a digestate that's used as a fertilizer. I won't for a second pretend to know anything really about fertilizer, other than anytime I open up the newspaper, I understand that Russia and Belarus, I think, are large exporters of fertilizer. Has that, improved the economics of that side of the business for you guys?
Yeah, we really see digestate as an upside for our projects. It's not something that we bank on as a source of revenue out of the gate. Our two main sources of revenue are taking the waste in on the front end. We get paid a tip fee for waste that traditionally would have gone to a landfill and paid a gate fee. So a very similar process. We get paid to process those organics on behalf of the producers of that waste material. And then we get paid for the RNG on a long-term contract with the gas utilities. And then the digestate, I think, in the future, we're seeing that become more and more valuable. So turning that into a source of revenue, I think, is something that is it's a long-term goal for us, maybe medium term. We're seeing that become valuable in Europe because of the conflict. And I think overall, what makes these projects that much more attractive is the fact that they're essential to maintaining our agricultural community and keeping a strong circular economy around existing practices.
Yeah. So in the near term, the renewable natural gas is the business. So maybe let's just kind of walk into that, the economics of that. As somebody who doesn't really have an expertise in even natural gas pricing, can you perhaps walk us through the costs and the sales price? Just compare traditional gas to renewable gas.
Yeah. So our main source of revenue, VRNG, that we produce. If you look at, there's a couple of options there that in terms of selling that gas. You can either sell it under a 20-year fixed price basis to one of the utilities that are looking to decarbonize. So FortisBC would be in that camp. Énergir in Quebec would be in that camp, as would a couple of other utilities in the U.S. That are increasingly looking to add renewable content to their gas grid. What's nice about Canada, if you look between Canada and the U.S., we've got a pipeline network. So if you construct a project in Ontario, as an example, you've got the option to flow that gas effectively into British Columbia, into Quebec, into the United States. So we've got 3 markets for that gas. What we're seeing right now is contracts that are anywhere from $25 to $30 to $45 a gigajoule on a contracted basis, depending on where you are in the country and what the nature of the project is. That would compare to spot pricing for traditional natural gas that historically was at $3, I think peaked out above 10 and is sort of trading in the high single digits. So a lot of the value of the renewable natural gas is really the renewable attributes from the carbon negative production process. So the fact that you're capturing emissions allows the utilities to offset their carbon tax and decarbonize their overall operation.
Okay, so by purchasing renewable gas, even though there's a premium on the fact that it's created sustainably, they get some sort of government support in the form of either credits or a reduction in their carbon tax. That's the general math?
Yeah, essentially that's the math. What we're seeing more and more of in the space, and across the renewable space, is companies that have net zero targets also looking to contract directly for their own purposes. So they're looking to buy green gas or renewable natural gas directly to offset their operation. So I think the utilities are there as a buyer, as are the direct deals that we're seeing people do with large users of gas.
Mm-hmm. So I know, for example, with Fortis, I know they're making a large shift to have a certain percentage of their gas become renewable. I'm assuming that's government mandated, so they have to hit a certain target.
Yeah, so they have both program. They have a program that has been in place since one of our facilities started producing the first molecule of renewable natural gas into the pipeline network, which is just over 10 years ago from our Fraser Valley biogas facility. That was Western Canada's first RNG producing facility. And the program started out as I think an internal program where they were looking to take a leadership position. They've really done a great job of being a leader in the space. So they've got their own internal targets. Those targets, I believe, now align well with BC's 30 by 30 goals in terms of reducing emissions by 2030. So currently that is a 15% RNG or renewable content in their system by 2030. Énergir has similar targets. It's kind of what we're seeing across the space is there may be an interim goal, but 2030 goals to have a material amount of green gas in the gas pipeline networks.
So as a percentage, I mean, 15% of, for example, the Fortis BC pipeline, I'm imagining that's probably a very, very large number. I'm trying to just imagine the scale of that. Roughly how big, can you kind of illustrate how big of a market that is?
Yeah, I think when we look across Canada, the Canadian Biogas Association has some really interesting figures. I think when they look at all of the organic waste across Canada, I think if we use all of it and we're able to capture all of the biogas associated with that waste, we're looking at something like 10% of our existing gas needs. So it sounds like maybe a small number, but the reality is that it's a number that we can make a significant dent in our emissions today by converting existing assets into renewable natural gas producing facilities within the span of 6, 12, 24 months for the projects in our portfolio. So that's what's exciting. I think the other piece of it is if you look at the fact that these projects are carbon negative, 10% RNG content in an electrical utility sense would be a lot higher than 10% solar content. So it's more bang for the buck for the gas utilities, and it keeps them competitive with their electrical peers.
So if we're looking into the long term of this, the sustainability of the RNG industry in general, what is it? Can we talk about how sustainable is this business over the long term? And what are some of the things you guys are doing to, I guess, create your competitive advantage? You look at the cores here, perhaps we'll touch on all of these, but the competitive advantage is one thing that no matter what company you are, no matter what industry you are, this is something we love to dig into. So if you could kind of give us any color on that.
Yeah, so we're one of the first movers in Canada in terms of consolidating assets across the country. I think when we look at the renewable natural gas space today, it's very similar to what the wind and solar space looked like maybe 10 or 15 years ago. There's a number of single project owners that are smaller businesses with greenfield projects. There's some existing assets that probably need more capital to be invested. And we've really taken an approach that we want to be a developer, so developing new projects from scratch, an owner and an operator of these facilities, and to have a platform to be able to be in multiple provinces, to share resources. That's been our strategy, and we've been effectively growing at a rapid pace with acquisitions that we've done in BC. This year, we've done an additional acquisition in Alberta. We've got a development project, a significant project with our Project Radius facilities in Ontario that give us our next leg of growth. And we're looking at other provinces and other development projects that sit within our pipeline as well. So really it's about having the technical expertise in the RNG space. So having the personnel that understand, how to optimize these facilities, how to ensure you're designing a facility that will be resilient. Our team has seen over 100 projects in the space, and that really helps us have an advantage with some of the smaller asset owners to be able to bring those projects into our portfolio, to share in the upside with them, and to be able to continue to develop and grow across the country.
So you touched on, you mentioned wind and solar. And when I think about those industries kind of getting started, obviously some of their biggest challenges were costs were so high and the price wasn't competitive. So I'm just kind of curious from a renewable natural gas, perspective, what are some of the challenges you guys are having getting into this relatively new industry?
Yeah, I think what we're seeing is, so the offtake, the renewable natural gas itself, the offtake agreements that we're seeing are very strong. So very comparable to what you see in the wind and solar space. And that really underpins a long-term stable contracted cash flow profile. What's important is to have presence in every region that you're operating so that you can have feedstock flexibility. So the ability to bring in different types of waste, the ability to have strong partners, in terms of feedstock providers in every region, I think is really important. What we're also seeing is with new projects, there's a lot of there's a lot of variability in terms of what the design looks like. We see some smaller technology providers that may own a project where they're looking to showcase a specific piece of technology. Our perspective is that there is a simple formula for success in the business, and that's to use proven technology, to have feedstock flexibility. The market will change over time. What humans consume will change over time, and ultimately there are a number of different products that can provide significant gas production. So as long as you're able to take all three types of waste into a facility, you've got resiliency on the back end.
Mm-hmm. You mentioned there was like the three main types of feedstock that you guys intake into your facility. I'm just curious. I'm just trying to think of risks to the business. Is there a risk that you can't get enough feedstock, or maybe like is that a significant risk?
I think it's something that we spend a lot of time on de-risking. So we look at a mix of contractual feedstock. So municipalities typically contract feedstock for 5 to 10 years. I think for the right facility, you can get a longer term feedstock contract. We look at the market overall. So when we talk about where those organics are coming from, if they're traditionally going to landfill and we're just starting up in a new region where there's a green bin or commercial organics collection that hasn't existed coming into existence, there's a very high growth rate of organics that need to find a home. So in those types of regions, we think there'll be continued upward pressure on infrastructure. There's not enough infrastructure in region to process those organics, and so having facilities that are built and established will allow us to be competitive in the long term in terms of providing an outlet for organics. I think also having the long-term contracts on the gas side, where you're getting two sources of revenue, it really balances that risk. The ability to take feedstock in on the front end that is really high energy, produces a lot of gas, or in other times you may want to take feedstock in on the front end that produces less gas, but is a problem and doesn't have a disposal home, and it's a significant source of revenue for the processing side of it. So by having that balance, I think you can really de-risk the feedstock mix coming in and have a facility that's going to operate sustainably for the next 20 years and beyond.
That's funny. I'm glad you mentioned the green bin, because for some reason I had this totally backwards idea, thinking that I scrape my food into a green bin, I send it out, and then it turned into like a bag of compost or something that's sold at like the garden store. I didn't even really think that's probably that's obviously a direct feedstock for you guys. So it's not necessarily going to turn into this compost bag. There's probably a whole bunch of things. So for some reason, I was thinking of that as competing with you for this supply, but I guess that's a direct supply for you. So the more green bin programs in Canada, that would technically be a good thing, more feedstock, I guess, right?
Correct. So if you look at Ontario today, they might have 25% of their organics going through a green bin program. As that gets closer to traditionally targets are 70% or higher diversion rates away from landfill. That's just a significant growth in terms of available feedstock for us. So that's what's exciting, is to be in on the ground level today before all of that waste has a home, and to have established facilities. That's what's going to present even more interesting opportunities down the line. I think the other thing is that these can coexist with compost facilities. So a good example of that is we've got a project, Net Zero Waste Abbotsford, which traditionally processes organic waste into compost. We're adding on top of that the ability to digest those organics on the front end. And then ultimately we'll take the solids out of the process on the back end and put them back into the composting operation. So there we'll have liquid fertilizer that will be spread on farmers' fields. We'll have compost that we sell to the general public as well as agriculture. And then we'll have gas and feedstock revenue on the front end.
Okay. You mentioned 25% for Ontario and the rest of it not making it to the green bin. So if you're one of my buddies from Toronto, guys, do better than that. 25%. That's those are rookie numbers.
And those could be dated. Those could be dated. I know Ontario's come a long way, but
we'll give them the benefit of the doubt for now. But I'll follow up with some research. Okay, so this next question is kind of the least fun of all of them, but honestly, I think it's one of the most important from an investor perspective. It's been a tough market. I'll certainly give you the benefit of the doubt on that front. Since the IPO, though, the stock is down roughly, depending where it's trading at, roughly 50%. Can you talk us through, in spite of it seems like you guys have made a lot of progress. You've got an incredibly healthy balance sheet, lots of projects in the pipeline. Can we talk about some of the reasons? What would you say to a shareholder to kind of walk them through this? What in your opinion, do you think has happened and where we go from here?
Yeah, so it has been a challenging market in terms of, if you look at the share price of small cap companies, including ours. And I think what we're focused on is developing the projects that we have in our portfolio, and we're fully funded to do that. So we know that the value of our portfolio, the value of our platform, the value to our shareholders is really based upon the projects and the assets that we own and the long-term contracted cash flows that we are exposed to. So what's exciting right now is we've got a number of key milestones coming up. We've got 2 projects under construction in the fall. We're negotiating an offtake agreement on our Fraser Valley facility, which has been producing for 10 years. So it's coming from a 10-year-old offtake agreement and coming into 2022, where it's a much more lucrative market to produce RNG into. And so I think there's been a lot of work that we've been doing behind the scenes to get ready for the growth that we have coming now this fall. I don't know if that's short-termism, historically or not. What we do know is that as we build out our facilities to a core EBITDA of $13 million plus, that the value of our platform is going to continue to grow. Whether or not that gets recognized in the public markets, that depends on the market that we're in, and we're fully funded to grow to that level with our cash on balance sheet plus our debt facility. So I think we're in a comfortable spot. Where it becomes more important is funding future growth. So growth beyond our core portfolio. And we've been lucky enough to have some very strong relationships with the private infrastructure market. And I think when we look at growing, there's a lack of platforms like ours in the space. We saw BlackRock invest about $700 million in this summer into an RNG platform like ours, US-focused platform, Vanguard Renewables. And I think those types of deals allow us to continue to grow without needing to come back to the market. So it's less of a worry for us, but ultimately we'd love to see that turnaround with increased exposure and the news flow that we have coming.
Yep, certainly. So maybe one thing, the 2 key things I noticed is first, like I mentioned, your balance sheet is very healthy. Your assets substantially outweigh your liabilities as of June 30th, what I looked at. The one thing I did notice is that this quarter compared to the quarter last year, or for 3 and 6 month period, revenue dipped a little bit. Can you give us any context around why that happened? And I know there is some context to share around that.
Yeah, so we went... First of all, we went through a major flooding event late last year in the Abbotsford region, where 2 of our main facilities are located. We were fortunate to stay open at one of the facilities, and we ended up taking substantial amounts of the agricultural waste in Abbotsford that were perished in the floods. So we kept our doors open. A lot of blood and sweat and tears, went into keeping those facilities open in terms of being able to take that organic waste and help Abbotsford with the cleanup efforts, help the Ministry of Agriculture with those cleanup efforts. But with that, with sort of a regional flood like that, there's been continued pressure on our operations in terms of cleaning up those sites and getting them ready for our expansion projects. So that's been a reason for additional expenses. Those are, in the long run, going to be covered by insurance proceeds. Subsequent to the end of the quarter, we saw a lump sum payment that really offsets almost all of the additional expenses.
Oh, interesting.
So I think when we look back at this year, you take into account what was a really wet Q2 for lack of a better term, a lot of rain. a lot less yard work, a lot less organics processing happening. So versus last year, it is a seasonal business. People do yard work when the sun is shining. Our underlying business, which is about a $3 million EBITDA business today, going to 13 with the expansion of Fraser Valley Biogas, Grow Tech, and our facility at Net Zero Waste Abbotsford. We transition away from more of a seasonal business, and we'll have a lot less seasonality because of constant or near constant RNG production and taking in commercial waste on the front end. So that that will balance itself out in the long run. And I think when we look back at this year, net of insurance proceeds, it's really where we expected to be at the start of the year.
Okay. And I wanted to bring that up because I'm from BC. I'm in Vancouver right now, so I saw firsthand. Like, to say it was a wet quarter is a massive understatement. I've never even heard of the term atmospheric river before to describe how heavy that rainfall was. So crazy force majeure almost of something that just is typically unseen. Is there something like, I would like to think something like that never happens again. My whole life I've never seen something like that happen, but are you taking steps to, I guess, fortify to be prepared in case something crazy like that does happen again? I don't know the likelihood of something like that ever happening again, to be honest.
Yeah, I think we have to be prepared for more and more uncertainty as it comes to variations in climate. I think we're very well positioned to do that with our projects under construction. So we've taken into account what just happened into our design, so we're prepared for that. I think as has the broader region in terms of preparing for floods that might equate to last year's flood events. I think so from our perspective, well covered for what's happened historically through insurance, and then go forward. I think glad that it happened when it happened. Had it happened a year later, would have been a tough pill to swallow on a brand new constructed facility. But today where we sit, we're making the changes necessary to incorporate any potential future flooding in a way that is prudent and I think will set us up for success.
Yeah, I think that makes sense. Well, switching to a more lighthearted, positive tone, how about, if is there anything specifically that investors should be most excited about kind of going forward, let's just say the next year?
Yeah, I think this is it's a major growth period for us. So we've our initial financing pre-IPO was done at $5 a share and really set the stage, allowed us to acquire our first two facilities. We've then acquired our third facility at Fraser Valley Biogas and Grow Tech. All of these projects are brownfield expansion projects that are now coming to the exciting part, the part that we live for, which is putting shovels in the ground, completing the expansion, and then producing, in some cases like Fraser Valley Biogas, we'll just produce additional RNG out of that facility through the existing channels. In other cases, we'll be doing our pipeline tie-ins and tying back into Fortis's network, and then development projects that we have sitting in our pipeline. I think those, outside of our core projects, what excites us is we continue to see value in projects that others may have run out of funding to develop on their own. They may have run out of technical expertise, or they may just be looking to have exposure to a portfolio. So if you can think of you own a single project in Ontario, you've had to deal with volatility around that project. You've never had the capital to develop the way you want it, or develop it the way you wanted to develop it. I think the value proposition for us as a consolidator is to come in and partner with that existing owner to acquire, in our case, what we look for is a majority ownership position and an operatorship position, but happy to bring in a partner that remains exposed to the facility. And also with other deals that we've done, those owners have taken back shares in EverGen and continue to be shareholders, continue to provide feedback and guidance on the local markets that they've operated in for years, and it really has worked out well. So continued growth through M&A would be the other thing to look out for.
Maybe we touch a bit more on that. I saw you did get a new capital injection from Roynat. That's, I think, a Scotiabank subsidiary. Correct me if I'm wrong, was that $30 million, $31 million as a debt facility? Is that used to push forward your consolidation strategy? Can you tell us a bit more about that? Next steps?
Yeah, so that facility we announced in August, we're working to close with its Roynat subsidiary of Scotiabank and EDC as well. So
Okay.
they've provided terms that are very attractive for the space. That capital will get used first and foremost for our core projects, but we've applied for a significant amount of grant funding as well. So depending on the results of those grant programs, which we expect in the next couple of quarters, there's an ability to recycle capital into future development projects. I think that the other thing that we focus on is building that portfolio of projects that sits in our near term pipeline. I think we look at how that might be funded. I think there's very strong appetite from the private sector to come in and partner on future growth. So I think that that's something that we'll consider as well if we're looking to accelerate our portfolio.
Prior to doing this, I was in the institutional business as well, and the appetite for this kind of infrastructure project was, this was maybe 5, 6, 7, I forget, years ago, but that was one of the biggest things that they were talking about was partnering on these big infrastructure projects, especially if they're related to anything ESG. So I would assume you'll have no problem finding additional partners as you look to scale and continue your roll-up strategy. To kind of wrap things up, to conclude, I'd like to leave it a little bit open-ended for you with perhaps, let's say, 2 parts. First part just being, is there anything you want to just share with investors or somebody watching about what's exciting? And afterwards, I'm going to ask you, what is one specific thing that you want to highlight, what is one reason somebody should buy your stock? So let's just start off with the overview, just kind of an open floor for you. Speak to investors, anything you'd like to say.
Sure. So I think really we've got a company that we're extremely proud of in terms of what we've been able to acquire and accomplish to date. I think today we're sitting at a share price that is really appealing for investors that are buying today on market relative to our existing shareholders. So I think it's a tremendous opportunity for those that are aware of what we're doing to come in and enjoy the fruits of our labor. I think we're really excited for the next 12 months. Our growth profile. I think if you look at where peers are in the space as well, if you look at, there's really 2 groups. There's groups that have less than $5 million of EBITDA and growth plans, and we're part of that group. Those companies trade anywhere from where we are today to $700 million of market cap on the future growth. So I think there's a real opportunity to have a re-rate, even to that peer group. But ultimately, our goal is to get into double-digit, $30 million plus EBITDA with our existing portfolio of projects, core and near-term pipeline. And if you look at what that means, you look at companies that are north of $1 billion that look very similar to the Northlands, Algonquin, Power, IPP companies because of their exposure to long-term contracts. I think we're very similar. So I think that's the opportunity. We didn't touch on maybe all of that previously. I think it's really an interesting sector. There's only 7 publicly listed companies that that are focused in the RNG space, and it's an exciting time.
I also have Algonquin in my portfolio, so it's cool to see you compare to that. So how about this? Just one rapid fire reason, why should someone buy your stock?
Our team has executed projects across the country. We've got a portfolio that is capable of delivering EBITDA growth that I think will get us noticed, and we're heading right into a catalyst-rich quarter. So I think right now, I don't think there has been a better time for somebody to come in looking at historic levels, and I think we've done a lot to de-risk the business since our initial financing.
Amazing. Chase, thank you so much. Everyone watching, this is EverGen Infrastructure Corp, trading in Canada, EVGN.V. If you're American, they trade on the OTC, just upgraded to the OTCQX exchange, EVGIF. We're going to be doing this again. If you have any questions, reach out. Chase, hopefully they'll steal some of your time again in the future. Thanks so much for doing this with us.
Likewise. Thanks, Gavin.